Hello and welcome to the weekly update. I want to go through the usual, have a look at what Bitcoin's doing, what's happening in the macro environment, and of course what's happening in crypto itself, and whether it's time for us to start making decisions, whether it's time to get more into the market, or relax and see what happens from here. So first of all, I'll just go to the charts. So you can see here we've got the 4-hour chart. Let me just go back out to the 1 day just to see the overall macro picture first. You can see here again, as we've spoken before, Bitcoin in a general downward trajectory, sideways of course in the main, but in a general downward direction because we've had lower highs and lower lows up till recently. And again, if I scroll in, you can see here at this point, this was its lowest low, and from here it created a high. From there, where the blue arrow is a higher low, so it's higher than the previous low. And likewise in the arrow up here, it's a higher high, higher than the previous high. And so this is a positive move, and the first time in many months that Bitcoin appears to be putting in some positive movement. If you look at, just underneath here, some are claiming this to be a higher low. If that were the case, and I don't believe it is, well, then you'd have to claim that this is a lower high, which also would be bearish. What I think we need to do is let this decide whether it's going to make a significant move either way. So in other words, if this was to move down here, get below this blue line, but hold without going as low as the previous low, then and move upwards from there, that would suggest we've got a higher low, which would be very positive. If, however, it was to create a low lower than the previous low, it's reversing the trend again and going back into a bearish market. Likewise, if this was to reverse and move upwards and go short of creating a higher high, again, that would be bearish. But if it does happen to get above this high and create a new high up here or further, then that would be very much bullish. So from the chart, basically what I'm saying is I believe it's a time just to sit, hold and wait and see what happens in the market from here. It's very much, again, pretty much sideways action here for the last few days. And I think we just need to take a breath, take it easy, and let's see what the bigger picture, what the overall market is showing us. So if we move across to a couple of market update slides that I have, the first one is, of course, the national debt, the US national debt. In its first day of its new fiscal year, it added on a mere 204 billion to create an all-time high new record of 0.7 trillion dollars. It feels like only a couple of months ago we were talking about the debt being at 34 trillion. It's now very much closing in on 36 trillion, and it's increasing in an ever more alarming rate. This cannot be good in an overall economic environment. With that, you can actually see, and even if you look at the numbers, in the numbers above, it was 35,669 billion. It's already gone up nearly another 20 odd billion in the days between taking the first screenshot and the second screenshot this morning. And if you look at that per debt, the debt amount in the US based on every debt per taxpayer, in other words, if you were divided debt by the total number of taxpayers, each one of them would have to pay 270,000, over $250,000 each, in order to bail out the country. Now, bearing in mind, in a country where well over 50% claim that they wouldn't have up to $1,000 for an emergency event like a car breaking down or something to that effect, they wouldn't have the money to pay for that. It's pretty unlikely you're going to have too many people out there with $250,000. So it's a massive, massive debt. It's spiraling out of control. This can't be good for the overall economy of the US or future our economies around the world. It's uncontrollable at this stage, and if you had a business adding on this much debt every day, every week, every month, every year, they would be absolutely out of business at this stage. But the US is just continuing to print more and more. Also, we have this chart, the uncertainty index. It's rose to 103. What's the uncertainty index? Well, this is the highest value it's been in 50 years. And where there's uncertainty, there's less money going to risk on assets. So the more uncertain you see in the market, the less chance there is of a lot of money piling into risk on assets. So, of course, there's lots of uncertainty out there. There's the US elections in less than a month. Of course, there's what's happening in Russia, Ukraine, of course, the Middle East now as well, and many other areas in the world where there's very much high tensions and potential for wars. So with this sort of uncertainty in the market, it doesn't tend to bode well for risk on assets. And here we have last month was the fourth biggest month for central bank rate cuts in the 20th century. So in other words, each bar here is a monthly, and it's the number of central banks around the world during that month that have done rate cuts. And we see, the very biggest one here, of course, was during COVID, March 20. There was 49 different central banks did rate cuts in the same month. And you can see the previous two highs before that were in the financial crisis of 08-09. There was 27 and 28, respectively, rate cuts from central banks through 2 given months close together. And then we have just this past month where 26 central banks around the world had rate cuts. Why is that? In the previous 2 times, it was a reaction to huge financial situations, one the financial crisis and one COVID. And here we have in what the American Fed keep telling us is a very strong economy and all is going well. But despite that, we've had 26 central banks around the world, very close to the second largest in the 20th century. If it was 3 higher, it would be the second highest in history in the century. So why the big rate cuts if everything is so good? And we can see that it's happening all over the world. It's happening in Europe, it's happening in China, and like I say, 26 central banks around the world. So something is definitely up. On the positive, so that's the macroeconomic environment that we have out there. Lots of uncertainty, huge debt, but we see that the governments seem to be absolutely determined now to reduce interest rates. And I believe the money printers will be turned on very, very soon. Already have been turned on in China in a very big way, with over 100 billion stimulus already put into the economy. So that's the potential downfalls in the macroeconomic environment. However, we see on the positive side, again, within crypto, it's mainly positive. And here, this is a negative that's becoming a positive in that the FTX, I'm sure the exchange that most people are aware of, went into bankruptcy. Many people had money on exchanges, lost those funds. Well, now it looks like they may recover approximately 120% of their lost funds as part of a $16.5 billion repayment plan. So in other words, if you lost $1,000, for example, you're in line to get $1,200 back. You might say, that's amazing, they're getting their money back and more. Well, in actual fact, let's say for argument's sake, at that time, if they were holding Bitcoin is a fraction of what it is today. So if they were to receive back Bitcoin, they'd be receiving back 3 to 4 times the dollar value of what they had at the time. So you can see it as a sort of we'll call it a happy medium in between. But the positive on this is there's going to be $16.5 billion paid out, we believe, in a stable coin. And a big percentage of that, because these are all people involved in crypto back a few years ago, a big percentage of that is highly likely to find its way back into the market, which of course is more liquidity, more buy pressure, and potentially very positive for the crypto space. At the same time, we see the global liquidity entering the next bullish phase. So this tends to go on cycles of every 4 years. The gray is just that, every 4 years up and down. The blue is the global liquidity that tends to follow it fairly closely and very closely since 2018. And we can see that's very much on an uptrend. And if it's to follow that gray line as sort of expected, then it's upwards from here to the end of 2025, which is usually positive. So we see with all this additional liquidity coming into the market, that's usually bullish for risk on assets. And so before I get to the next chart, I guess what I'm looking at here is this. One of the biggest uncertainties that out there is the American elections, but that's very near to resolving itself in the next, let's say, within a month. At that stage, one of the uncertainties will be taken out, and that we'll know which person is president-elect. On top of that, many people would believe that one of the candidates is very much someone that would have the potential to stop or reduce the number of wars going on around the world. And if he is elected. Many people would see that as being bullish too, from the point of view of reducing that uncertainty. So there's a real feeling out there now that if Trump were to win, that it's highly likely to be bullish for crypto directly, because he's been very positive about crypto, but also he may be able to reduce the uncertainty around wars, and has claimed that he will be able to do that. What these people do when they actually get in, what follow through, who knows. But that's the feel that's out there, and that's the narrative, and these things tend to follow narratives. And so I guess my point here in summary on this area is, we don't need to make a move. I don't think you need to rush into the market at this stage. I think we have time to let some of the uncertainty unfold, and give us that some certainty. At the same time, Bitcoin is going sideways. It is also in an uncertain position. And I think until the other uncertainty is taken out, then we'll start to see Bitcoin make its move up or down. I think in the bigger time frames, I think we see Bitcoin going up, and going up really strongly. And so my overall timing, I believe, is something like this. I think we see a huge upside between here and at least early next year, first quarter, might run into second, third quarter. But at some point in time, I think the economic numbers will come home to roost, and we'll see a major pullback at that stage. But that doesn't mean we can't have a strong pullback first, a final washout, before we go off on that upward cycle. And so it's a case of keeping a close eye on what Bitcoin's doing, follow that, follow the narrative, and depending what direction it starts to go, make your decisions from there. You don't need to rush in before it, in my opinion. And so the other thing I want to just look at here is what to buy into in crypto, if that's what you're planning on doing now or sometime soon. And of course, the safe assets in crypto would be considered Bitcoin, Ethereum, and so on. And so the top 20, top 30 would be the safer assets that potentially will do well in this market. But of course, the biggest upside tends to be on low cap crypto projects, or early stage crypto projects not yet on exchange. But here's an interesting statistic. The year-to-date performance of all Binance listing coins. So you can see it's in the red. In other words, if you were to buy into a coin when it launches on Binance, between when you bought into it and now, the majority of these have fallen by 30 to 90%. Huge fall in prices. So you're really acting as exit liquidity when you buy in an exchange on a coin that's only just released. There's only been two exceptions to that. One's a meme coin, and the other one is a decentralized exchange on Solana. And of course, Solana has had a great year. But the point in this for me is, number one, buying when a coin has just launched on an exchange is not a good time to buy. You want to buy either into established cryptocurrencies that might be at very good value at a given time on the exchanges. Hence the reason we would be hoping to see a pullback that would allow to buy into those well-established cryptocurrencies that have very significant upside. Or, of course, buy into early stage cryptos that are not yet on exchange. And that's where the real value is. And here's just another indication to show that be true. VanEck has launched, one of the biggest fund managers in the world. They have assets under management of 118 billion. They've just launched a 30 million venture fund to invest in early stage fintech, crypto, and AI startups. If only we knew someone who was doing something like that to give us access into this early stage crypto projects before the big funds. Wouldn't that be great? With that, I wish you a happy weekend. Hope all is well. Keep an eye on this space, and we'll talk to you all very soon.